Welcome to a new episode of Book Summary of the book Common Stocks and Uncommon Profits and Other Writings by Philip Fisher. You can change in settings to listen in different languages. Now, have you ever wondered how do some investors manage to find the next great company long before the rest of the world notices it? Meet Philip Arthur Fisher, one of the most influential investors of all time. His book Common Stocks and Uncommon Profits changed how the world looks at investing. While Benjamin Graham focused on numbers and undervalued stocks, Fisher looked at something deeper: the people behind the company, innovation, and growth potential. In this voiceover, we will take a journey, chapter by chapter, through Fisher's timeless wisdom, learning how to identify companies that do not just survive but thrive. Chapter 1: Clues from the Past. Fisher begins by telling us to understand the future potential of a company, we must study its past, but not just the financials. He says, look at how the company has evolved. Has it shown the ability to adapt? Has it consistently innovated? It is like observing a tree, not just its height, but its roots, its strength, its health. Fisher shares that great companies leave clues in their history, clues of innovation, management quality, and product development. If a company has shown excellence before, it is likely to continue that pattern. Now, the insight here is, do not be blinded by short-term numbers. Study the pattern of growth. Chapter 2: What to buy. The 15 points to look for in a common stock. This is the heart of Fisher's philosophy. He gives us his famous 15-point checklist, a kind of investor's secret recipe. Now let's simplify it. Number 1. Does the company have products or services with enough market potential to make possible a sizable increase in sales? Look for growth potential, not just stability. Number 2. Does management have the determination to continue to develop products even after success? Great companies keep innovating. Number 3. How effective is the company's research and development? Innovation must be systematic, not accidental. Number 4. Does the company have outstanding sales organization? Number 5. Does the company have a worthwhile profit margin, and how does it maintain it? Number 6. What is the company doing to maintain or improve profit margins? Number 7. Does the company have outstanding labor and personal relations? Number 8. Does the company have outstanding executive relations? Number 9. Does it have depth in management? Fisher wants never invest in a one-man company. Number 10. How good are the company's cost analysis and accounting controls? Number 11. Are there any peculiarities in the business, like hidden cost or risks? Number 12. Does the company have a short range or long range outlook? Number 13. Will the company need to raise more equity in the future, diluting shareholders? Number 14. Does management talk freely about its problems or hide them? Number 15. Does the company have management of unquestionable integrity? Fisher says investing is not about buying the cheapest stock, it is about buying the best business. So, here is the insight. A truly great stock is one where the company's management, innovation, and long term vision align with gears in a oil oiled machine. Chapter 3. Where to find the growth stocks. Fisher introduces a fascinating idea, the scuttlebutt method. What is that? It is a bit like being a detective. He suggests talk to customers, suppliers, employees, and even competitors to learn about a company. Go beyond what's written in reports or headlines. If everyone in the industry respects a company, its honesty, its leadership, its quality, that is a strong sign of future success. So, here is the insight. Real investing is about curiosity. The best investors are also the best listeners. Chapter 4. When to buy. Fisher's advice here is simple yet profound. Do not try to time the market, time the company. He says, if you have found a great company, do not wait for a perfect price. Buy it when you are convinced of its quality. Waiting for a dip might make you miss decades of growth. He shares how patience and conviction matter more than short term timings. So, the insight here is great opportunities rarely look perfect when they appear. When to sell. This chapter is full of wisdom. Fisher warns against selling too early. He says, once you have found a great company, let it grow. Do not sell just because the price has gone up a little. He jokes that the stock market is filled with people who know the price of everything but the value of nothing. Sell only if the company's fundamental change permanently or you have found a significantly better opportunity. So, the insight here is the big money is not in buying or selling, it is in waiting. Chapter 6. The importance of management. Fisher stresses that good management is the backbone of a successful company. He looks for leaders who are honest, forward thinking, willing to admit mistakes, focused on innovation, not just profits. He compares great management to a skilled captain steering a ship through storms. They might not control the waves, but they navigate them with vision and courage. So, the insight here is invest in people, not just products. Chapter 7. The Investor and Inflation. In this chapter, Fisher reminds us that inflation silently eats away our wealth. To beat inflation, invest in companies that can raise prices without losing customers. Those with strong brands, unique products, and loyal customer bases. He gives the example that during inflation times, companies with high pricing power not only survive but thrive. So the insight is invest in business whose products are needed, not wanted. Chapter 8. Conservative investors sleep well. This is one of Fisher's most reassuring ideas. He says the word conservative does not mean avoiding risk. It means avoiding permanent loss. A conservative investment is one where the business is fundamentally sound, management is trustworthy, long-term prospects are bright. Fisher explains that sleeping well at night is the true sign of a smart investor. Inside here is peace of mind is the ultimate dividend. Chapter 9. Developing an investment philosophy. Here, Fisher encourages readers to build their own set of principles, not just follow others blindly. He says the biggest danger for investors is emotion, greed during booms and fear during crashes. His message is simple: discipline and patience are your greatest allies. Do not chase the market. Understand it. Do not copy. Think independently. So the insight here is the best investors do not follow the crowd, they lead themselves. Chapter 10. Reflections and Legacy. In the later essays, Fisher reflects on decades of investing experience. He emphasizes that the world will always change, technologies evolve, industries fade, new opportunities rise. But human nature, fear, greed, excitement remains the same. He encourages investors to keep learning and adapting. Growth investing, he says, is a mindset, not a formula. So the insight here is adaptability, curiosity, and long-term thinking make you a truly uncommon investor. Now, as we close, let's gather Fisher's timeless wisdom into a few golden takeaways. Number 1. Invest in exceptional businesses, not cheap stocks. Number 2. Management quality matters more than temporary profits. Number 3. Patience is the secret weapon of great investors. Number 4. Use the scuttlebutt approach. Seek real world information. Number 5. Think long term. The market rewards vision, not speed. Philip Fisher's ideas shaped legends like Warren Buffett and Charlie Munger. Buffett himself once said, "I am 85% Graham and 15% Fisher." That 15%, he admitted, made him billions. So remember, if you wish to find uncommon profits, you must learn to see common stocks in an uncommon way. And that is the story of Common Stocks and Uncommon Profits, a book that reminds us that investing is not just about numbers. It is about vision, people, and patience. If you enjoyed this summary, keep learning, keep exploring, and keep investing in knowledge, because knowledge truly is the best compound interest of all. So that was all in this video. Thank you for joining us. If you enjoyed it, do not forget to like, share, and subscribe. See you soon in our next video. Till then, take care. Bye-bye.